Hey everybody, Chris here. Well, after a big dump in the crypto market on Friday, things have pretty much stabilized going into the weekend, which is good. We're not seeing a further dump in crypto. So with Dogecoin settling right around 7 cents, that seems to be a new support there. We'll see whether Doge can hold that. But will Dogecoin recover back up to 8, 9 cents and even higher? That's what we're going to look at in this video. Please be sure to subscribe to my channel. Always appreciate the support. Hit that little notification bell so you can be notified when I make new videos, as well as when I do live streams. We had a good chat last night on live streams talking about Dogecoin and where Dogecoin will go from here after surviving the little mini crash we saw Thursday night, Friday morning. And I'm following that up with this video, a little more detail on how Dogecoin can be recovering and where it can go from here. So let's go ahead and let's take a look at the charts and the news, and I'll show you what I'm looking at. So I'm going to start here with a tweet that I saw earlier this morning that's looking at a bounce in Bitcoin. This is Bitcoin logarithmic scale. I'll show you that in a second. And they're saying that we are at the bottom of this upward support and that Bitcoin is not going to go lower from here, that this is the bounce and Bitcoin is going to take off. So that's what they're showing here. And I go over to Bitcoin. I say, well, here's the Bitcoin chart. This is the normal chart, normal price chart. And what we see is this huge rise of Bitcoin late 20 into 21. And we see this double top before this crash back down. However, I changed to logarithmic, and this is on TradingView, changed to logarithmic, and this is what that tweet was showing. And this is exactly it. We get the initial touch back here in 2015. This is where it starts. We get the early 2020 little mini crash there that happened, and then where we are right now, touching again. So according to this, that is where we're going to bounce. And that is also supported by this chart here. This is the DXY. And on the DXY, this is the dollar cost average. And that typically when we see the DXY going up, we're going to see cryptos going down because that's a riskier asset. Crypto is. So if we see the DXY come back down, then we may see crypto going back up. So I go back to TradingView and I go down to the DXY. And so here's the DXY chart. And I zoom out a little more and I'm like, okay, I get that. Again, this is on a logarithmic scale. I can turn the logarithmic scale off on DXY. It doesn't really make that much difference. And we see this upward channel. Here's support, here's resistance. There's still a little bit of run here I'm looking at in terms of resistance, but I zoom out a little more and I go back to 2001 and the DXY was actually up here at 120. So when you're looking at the DXY, you're like, wait a sec, I don't see the direct correlation so much in the DXY to cryptos, but some people like to do it. They use it whenever it works for them. But that's what I see overall in that relationship. So we go to Dogecoin, and so here's Dogecoin. This is again on the weekly, and this is where Dogecoin is trading. This has been the past year and a half of trading of Dogecoin. Doge is still down here. So we have a long way to go where we can get up to 30 cents, 60 cents, and up here to 74 cents, 73, 74 cents. It's all-time high. Where Doge is trading now seems to be relatively sideways, but there is up and down action in that sideways trading. We go back to the hourly, and this is where Dogecoin is trading right now, right above 7 cents. So after this drop that we saw Thursday night into Friday morning, Dogecoin is leveling out right here. But we see that with Bitcoin as well. Bitcoin above 21,000. That was tough when Bitcoin dropped below 21, but many believe that Bitcoin still has a ways to go in terms of how it can drop back down to 17,600. That was its low back here, back in June. And it could actually drop even lower if you believe those 4-year cycles. And I showed this in my video the other day when I was saying which way is Dogecoin going to go from here. Is it going to go up or is it going to go down? In that 4-year cycles, it looks like Bitcoin trades from, it's an 85% drop. That's what it's been the past couple times. And this, if it repeats, that means Bitcoin should be going down to 12 or 13,000 for that full 85% drop from its all-time high, because that's what it's done before, if you believe that. So we're going to take a look at Dogecoin. This is an article that was looking at last night on my live stream from the Motley Fool, why Bitcoin, Ethereum, and Dogecoin plunged this morning. So this was printed on Friday, but there's a thing down here at the bottom called Now What? And this is looking forward. There's a lot going on here, but I think there are two main drivers of the sudden move. First, investors being optimistic interest rate increases were going to slow down in 2022, may have gotten out ahead of themselves. Not only is inflation not under control in the US, it may just be getting started in Europe. So that seems to be the fear that was in the markets that caused that dip. What we're going to see going forward is if we can't get a handle on this inflation, we're going to see more dips. And that's what I see going forward, is that the pain isn't over yet. Also, crypto tends to have a lot of leverage, which can lead to rapid increases or declines in prices. In the past 24 hours, $600 million of positions have been liquidated, which includes $223 million for Bitcoin, $162 million for Ethereum. So what happens is people were betting long. They were going into leverage, and they were leveraging positions long, thinking that we were starting a bull market rally, particularly led by Ethereum with the merge coming up. What happens is when you have that, and here's Ethereum, people were betting long, trading on leverage that Ethereum was going to continue up. When Ethereum dropped, any positions that were opened long up here at 1800, 1900, as soon as Ethereum dropped below 1700, we saw those positions liquidated. And here's a big drop right there. That was at about 1820 or so, and that big drop. Those are liquidations. That's when exchanges close out leveraged positions, saying, you lose, you're outside your percentage zone, and we're going to close your position. That's what happened. So that's what that leverage talks about. Going forward, though, the good news, none of these moves fundamentally change the long-term thesis for cryptocurrencies. Developers are still building new businesses for the blockchain. Users are still getting used to using crypto in the blockchain. And venture capitalists are pouring money into the space. As long as that continues, the future is bright. But the reality of volatility in crypto can be painful on days like today. That was about yesterday. So that appears to be what's going on. And for Dogecoin's future, does Doge have enough juice for more gains? This article isn't the best, but what they're talking about is the finish of 2022. And regardless of dramatic decline in value over the previous 8 months, Dogecoin continues to have great help. Any joint purchases made by retail merchants, and these retail merchants, I'm saying this is SpaceX and possibly Tesla here, could trigger Doge up to 35 cents. And I showed that on the charts, that 35-cent mark is where Doge was at its high position back in August and October of 2021. That would be the target for Dogecoin by the end of 2022. Now, for 2023, extra causes for Dogecoin.
corresponding to online tipping. What I think this is pointing to is Twitter. If Elon Musk takes over Twitter and then gets online tipping embedded into Twitter, this is what we would see in 2023 with Dogecoin possibly attaining 60 cents. That's the 60-cent mark. And then in 2024, we're talking advertising, further marketing, elevated utility. Now, elevated utility, I think that's pointing to Leave Dogecoin and what the foundation is doing by encouraging devs to build more on Dogecoin's blockchain. Then they're talking about 73-cent Dogecoin again, back up to its all-time high. But that's not until 2024. This looks realistic to me. I know you all want to see Dogecoin to $1, but it's going to take a while to get there. And that's so this is kind of interesting what they're looking at in these predictions and kind of hinting at what these triggers and catalysts will be for Dogecoin over the next few years.
So those long-term predictions of Dogecoin, you got to take those a little bit with a grain of salt. A lot can happen in the next couple of years, and we don't know. We don't know how long things will take, particularly with Tesla, SpaceX, and other big events. Those are the big catalysts, which will particularly help Dogecoin, but also what's going on with Bitcoin and the next halving, the 4-year cycles. So we're looking at 2024 for halving and possible big bull run into 2025. Would it really be that long before we see an overall crypto bull run? I tend not to think so. I don't think it's going to take that long. I think the whole crypto world seems to be changing right now. But there are many who believe these 4-year cycles will repeat and that it's not going to be different this time. I'll leave that for you. In the comments below, please let me know what you think about Dogecoin recovery, short-term and long-term, where you think Dogecoin is going. Give the video a like. If you haven't already, please subscribe to my channel. I appreciate the support. We'll see you next time.